Hello everyone, welcome to JA Crypto. In this video, we will go over 22 crypto slangs that every investor should know. We will discuss 13 crypto slang for bad days and 9 crypto slangs for good days. The cryptocurrency space can be volatile, swinging tremendously towards the upside or the downside. As with every market, there are good times and bad times. This is a list of crypto terms you are likely to see on a bad crypto day, so you can stay in the loop and join the discussion. Let's get started. 13 crypto slang terms for a bad day. Bag holder. Bag holder is a term used to describe a person who holds onto their assets despite a continuous or dramatic decrease in value. They may hold their position even when an asset's value crashes to essentially zero, sometimes out of hope that its price will eventually bounce back. In other cases, a market participant would be considered a bag holder if, for example, they missed out on an asset price's crash, where the asset price dropped so quickly they didn't have time to make a trade. Another situation in which traders could become potential bag holders is where they lose interest and completely forget about their cryptocurrency, not realizing the price of it has significantly dropped. At that point, once they do check, they may feel as though there is no point in selling because it is worth a fraction of the initial purchase price. Degen. Slang for degenerate, a degen is a type of trader who performs little due diligence when looking at a potential crypto asset to purchase or hold. Typical degens ignore any trading signals, fundamental analysis, or research, preferring to use other factors, such as if an asset looks cute or has strong meme potential. FOMO. Short for fear of missing out, FOMO refers to a trader's fear they may be missing out on a potentially lucrative opportunity. This fear can drive individuals to act impulsively and make decisions based on emotion rather than logic and reasoning. FOMO can strongly impact cryptocurrency prices and cause major volatility in crypto markets. It has been considered as one of the driving forces behind the rapid rise and fall of Bitcoin's price in 2017. But it can also lead traders to incur far greater financial losses. FUD. FUD is a marketing and communications term that stands for fear, uncertainty, and doubt. It is a psychological tactic used to influence people towards having a negative perception of something, such as a product, market, or brand, generally through spreading misinformation or inciting fear. In crypto, FUD usually falls into two categories. 1. The deliberate attempt to stoke widespread fear, uncertainty, and doubt about a particular project to manipulate prices downward. 2. General skepticism about crypto as an asset class can result in the spreading of exaggerated negativity or fake news on the topic. Whether deliberate or not, FUD can affect the market value of a coin, a company, a project, or even the market. It can be thought of as the opposite of FOMO. When markets rise, individuals may give in to feelings of FOMO. When markets are cooling, FUD can spread more easily. HODL. An abbreviation for hold on for dear life, the term HODL allegedly derived from a misspelling of hold, which has stuck around and now means to buy and hold. As such, a crypto trader who buys a coin and does not plan on selling it in the foreseeable future is called a hodler of the coin. The term is said to have originated from a 2013 online post to the Bitcoin Talk forum, where the typo first appeared. Essentially, the goal of a hodler is to weather the various ups and downs of the market with an eye towards long-term gains. Short-term market movements will not sway a hodler, nor even if entire markets crash or become seriously volatile. Instead, hodlers will hold their positions regardless of price out of confidence in the long-term value of crypto. NGMI. NGMI stands for not gonna make it. In crypto, it is often used to predict future failure due to a poor decision, such as selling the bottom despite all market indications that a token's value is on an upward trend. It can also be used as a label to ridicule people who have taken a stance against crypto or who fail to understand basic crypto concepts. Paper hands. Paper hands is an expression used to describe individuals as lacking the confidence to hold on to their cryptocurrencies. They are seen as typically selling in a panic, worried that the cryptocurrency they hold may fall to an undesirable price. Pump and dump. A type of scam, pump and dump schemes involve artificially inflating the price of an asset through false or misleading positive information. Typically, a group of people will buy large quantities of a particular asset at a low price, followed by spreading false information to drive up the demand and price of the respective asset. This sudden price rise is intended to prompt others to jump in and buy too, and the original group will then sell, dump, the assets to turn a quick profit, leaving those who bought late often incurring heavy losses. Wrecked. Wrecked is typically used to describe an individual's portfolio on a bad day or the negative situation that a person is experiencing with a specific cryptocurrency. Wrecked is often used on social media and forums to describe people who have suffered a significant financial loss in a particular crypto asset. This loss doesn't refer to any type of crypto specifically. It can be a loss through an NFT trade or through trading a cryptocurrency. Individuals are often described as wrecked when they are experiencing a large trade loss. For example, if an individual purchased a particular token, which then had a significant negative price action, they would be considered wrecked because they faced heavy losses, even if unrealized, by going into the trade. Rug pull. A type of crypto scam, a rug pull is when a development team abandons a project before it is completed, draining all assets to their own wallets and leaving traders with the abandoned project's worthless crypto assets. It gets its name from the expression pulling the rug out from under someone. Victims who are scammed in this way might say they got rugged. Shill. Shilling involves promoting the positive aspects of a project and spreading the word about it to convince others to purchase a cryptocurrency. Shilling can be done maliciously, as the person shilling, known as a shiller, may promote the project with the aim of inflating the relevant token's price in order to benefit themselves regardless of the token's actual characteristics. Whale. A whale in the crypto industry refers to an entity, individual, institution, or an exchange that holds a significant amount of a particular cryptocurrency. The specific amount of a cryptocurrency that qualifies a user as a whale is not fixed. However, the bottom line is that so-called whales own a significant portion of a cryptocurrency's total supply, thus potentially impacting the asset's price with their buy or sell orders. Due to the size of their orders, whales' transactions may temporarily increase volatility, especially in assets with low liquidity. Consequently, wary traders like to keep track of known whales in the industry to prepare for when they make a move. Bear or bull market. The term bullish refers to positive investor sentiment about assets. These investors are commonly called bulls. Bullish investors usually add to their existing positions with the expectation that the forward momentum in the market will continue. When investors say they're in a bear market, it means that asset prices are declining. Whether you are trading stocks, precious metals, or cryptocurrencies, a bearish sentiment signals depreciating values. Most textbook definition of a bear market claim there needs to be a 20% drawdown from the local high. Always keep in mind that the markets can go bearish at the drop of a hat, so it's important to know crypto terms to ensure you stay in the loop for all discussions about crypto. Now that you know common crypto slang for a bad day, check out crypto slang you can use for a good day. 9 crypto slang terms for a good day. The crypto space, while still young, continues to grow at a rapid pace. As more and more people join, unique language and slang continue to develop. Here, we discuss the crypto terms you may see on a good day. Airdrop. An airdrop is the distribution of cryptocurrency tokens or coins, typically for free and sometimes unsolicited, to a number of wallet addresses. It is often used as a marketing tactic for projects to bring attention to themselves and get their token out to more people. Airdrops are also at times used to reward early adopters and active users for a particular crypto project. An airdrop usually requires an action or satisfaction of certain criteria to participate, example, to hold a certain amount of tokens by a certain date. Individuals who have completed the desired action or met the criteria by the target date will then usually be included in the airdrop. ATH. ADH is short for all-time high and refers to the highest price an asset has historically reached since it was first listed. In other words, ADH can be thought of as the highest price ever paid for a specific asset. Diamond hands. Diamond hands is a term often used to describe the risk appetite of traders. It is a trading ethos commonly identified in long-term market participants. A trader with diamond hands will hold on until the bitter end, regardless of market conditions. The term may be used to signify a high appetite for risk. The archetypal trader with diamond hands doesn't cave in and sell their tokens until the tokens have reached their full potential in the trader's eyes. DYOR. DYOR stands for Do Your Own Research. It is commonly used in crypto to remind traders to vet a project before moving forward. Keep calm and stack sats. Sats stands for Satoshis, the smallest available unit of a Bitcoin, 0.00000001 BTC. The Satoshi name comes from the original creator of Bitcoin, Satoshi Nakamoto. Individuals commonly use this phrase to instill confidence in one another with regards to their participation in the crypto market. Keep calm and stack sats is often understood to mean that, no matter the market sentiment or the amount an individual is able to buy, they personally intend to focus on accumulating Bitcoin. LFG. LFG is short for Let's Effing Go, and is used to express excitement about a project. Moon/mooning. This expression is used to describe a cryptocurrency projected as having a strong or sudden upward market trend. When a cryptocurrency is mooning, its price is skyrocketing so high that it's figuratively going to the moon. Examples of phrases you might stumble across involving this hyperbolic term include: Ethereum is going to the moon, the price of Ethereum is soaring. When moon. Commonly used to ask when the price of a cryptocurrency will make a big jump. Prices are mooning, prices are going through the roof. People overly enthusiastic about a coin's prospects are labeled as moon boys. WAGMI. WAGMI stands for We're All Gonna Make It. The crypto community uses the acronym to inspire positivity and confidence in a project. It also encourages the community to support each other and not lose hope. When Lumbo. When Lumbo translates to When will you buy a Lamborghini? It's often used ironically to mock people focusing only on a coin's price. In the early days of crypto, it was frequently reported that wealthy cryptocurrency traders purchased Lamborghinis as a status symbol to prove their success in the market. Lamborghinis became synonymous with a cryptocurrency's success, with many people in the community using the crypto slang phrase "when limbo" to ask when a cryptocurrency will be worth enough to buy a Lamborghini. It's important to familiarize yourself with common crypto slang as you explore the crypto space. Always do your own research. All examples listed are for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained herein shall constitute a solicitation, recommendation, endorsement, or offer by JA Crypto to invest, buy, or sell any digital assets. Returns on the buying and selling of digital assets may be subject to tax, including capital gains tax, in your jurisdiction. Any descriptions of products or features are merely for illustrative purposes and do not constitute an endorsement, invitation, or solicitation. Past performance is not a guarantee or predictor of future performance. The value of digital assets can decrease or increase, and you could lose all or a substantial amount of your purchase price. When assessing a digital asset, it's essential for you to do your own research and due diligence to make the best possible judgment, as any purchases shall be your sole responsibility. Thank you for watching. Please click on the thumbs up button if you like this content and also click the subscribe button to be notified whenever we post new videos.